going on, guys? Biggest Bull Investor here. I had some free time this weekend, so I thought I would drop you guys an update on my portfolio. So without further ado, let's get right into the video. As you guys can see, on Friday we had a rough day, rough week for that matter, as there was a lot of profit taken, but I can't be any mad as I am still positive on a lot of my positions. We were down $698.58, and we lost an additional $99.85 during after-hours trading. For the week, we're down $1,068.96 for a total loss of 2.4% from the portfolio. We actually hit an all-time high this week before the sell-off happened, and that was on Tuesday, I believe. We almost were up at the $45,000 mark before the sell-off started to take place. For the month, we're still positive, $12.74. For the last 3 months, we're up $2,216.47 for a total return of 5.3%. For the year, we're up $6,751.49 for a total return of 18.34%. And our all-time, we're up $10,173.01 for a total return of 30.47%. Now, for the buys and sells, first we'll go into the sells. The company that we sold this week was Virgin Galactic, ticker symbol SPCE. We sold this for, I believe, 103% profit. Our average cost in this company was $9.25. We had 170 shares, and we sold it for $18.58. Yeah, we sold it for $18.58. So we had 100% profit. I do, however, miss the company. I just think that it expanded too far. They now have to start proving themselves. They have to make sure that they do send Richard Branson off into space this summer like they said that they were going to do. But I do believe that there is a lot of FOMO happening and a lot of people buying into the company. And towards the end of the week, the company did start to sell off. So I did, I guess, do good by selling it on the 22nd, because as you can see, it never reached its high point that it reached on that day, and then it sold off. So I guess I did a great call, but I do want to see this stock drop down a little further before I add any more positions into the company. So right now I don't have any position in the company, but I wouldn't mind holding a couple shares of the company. And that was basically it for the sales. Now, what I did with that profit is I brought 2 new companies into the portfolio, and those 2 companies are General Motors, GM, as this market is pretty expensive and it is pretty hard finding value in this market, especially with what's been going on in the tech sector. So I'm seeing what's going on with Tesla, and Tesla is super expensive, and they still have to deliver on the hype of the stock. And we have something like GM that is, in my opinion, super undervalued. And they also released an update on their Cruise vehicle. They released the actual model of what the car will look like and so forth. They still haven't given anyone a date of when we can expect those self-driving vehicles out in the market, but I will just place my money here and reap the benefits of a dividend as well as appreciation on the stock, which I believe will happen. My current average cost right now is $35.15. I have 114 shares. I will continue to add to GM until I get my average cost in line with the stock price, and then we'll turn off the buying of GM. So that was the first company that we brought. And the other company we brought a company called Diamond Eagle Acquisitions. And basically, what this is a placeholding company. This company will be turning into the company DraftKings. I don't know if you guys are familiar with DraftKings. It is an online sports betting play, and I do believe, like in doing my due diligence, figured out that's a company worth approximately $4 billion currently, and this company, this acquisition company, is only valued at $400 million. So once DraftKings hits the market, this company will turn into DraftKings, and the 40 million shares that they have will be DraftKings. So I want to probably get like 100 shares of this and probably do a similar play to what I did in um, in space. Once that acquisition happens, um, and people start to catch wind that this will become DraftKings, I believe that people will be buying into the stock, and it should shoot the stock price up massively, and then it will be up to the company to, DraftKings, to continue its rollout. And I know it's big in like my city in Pennsylvania, and New York. So they just have some more rolling out to do. I do believe that it will be a statewide thing that will be happening with the legality of sports betting, and this stock will receive massive appreciation once those things happen. So I don't mind locking up a little bit of money while that's happening as well. And that was it for the big buying. The other buy that I did was I added a share of Berkshire Hathaway. I added one share of Berkshire Hathaway. My average cost the last time we talked, which was about 2 weeks ago, was $220.69. I've now bumped up my average cost to $223.31. And we'll get into talking about what I'm going to be doing with Berkshire Hathaway when I get to it. So we're going to go over our stocks one by one. And we'll start off with Disney. The last time we talked in Disney, I was up $4,038.59 for a total return of 29.3%. This week we're up only $3,414.87 for a total return of 24.54%. I do know Disney had a big sell-off this week, and this sell-off, just like Virgin Galactic on the 22nd, it was up at its high points for the week, and then it dropped off. But this drop off definitely happened because Disney announced that they were going to shut down their Tokyo, their attractions in China, as that outbreak had happened with that flu, or that virus that's going on. So Disney and McDonald's also shut down their parks and restaurants to contain the virus and help out. So my heart goes out to that situation, and I hope that we can get this under control. But that was basically it for Disney. That's why that sell-off happened. Comcast, last week, 2 weeks ago in Comcast, we were up $1,032.56 for a total return of 28.3%. This week, however, we're only up $974.32 for a total return of 26.74%. Comcast also hit a 52-week high this week before actually selling off. If I can get the phone to look at it. Yeah, it hit $47.47. Or almost $55, almost 45, $48 before selling off. $47.74 was its high, and that was on the 22nd. And as you guys can see, the trend here is the 22nd, that sell off. a lot of profit taking happening in the market, as well as some news in some of the stocks that we own. But we don't care. We're in it for the long run, and we will continue to hold these companies. Next is Bank of America. Bank of America also presented earnings. I don't know if I talked to you guys about Comcast earnings. Comcast had great earnings. I'm just going to go back down there if I didn't say anything. Comcast did beat on its earnings. They noted that their internet growth is still rising at a great pace. They started talking about their plans for the Peacock streaming service, which will be rolling out before the next earnings call. So that's another thing that we look forward to. Bank of America, it had a okay earnings call. We were up last time we talked $1,519.31 for a total return of 23.56%. Now we're only up $1,112.51 for a total return of 17.25%. All of the analysts that have been on CNBC and talking about Bank of America is still saying that they feel like Bank of America has legs to continue to see growth in their stock, but they are saying that the bank sector overall is starting to, see massive gains, and that the sell-off should happen because a lot of these stocks are overvalued. Like J.P. Morgan, they're not overvalued, but they're overbought. So they're expecting a pullback in the banking sector. So, but a lot of the analysts that were on CNBC, they do still like Bank of America. I will continue to hold Bank of America. I just think it's a fantastic company. And that's pretty much it. Next is GM. I didn't hold GM the last time we talked. This is a brand new stock in our portfolio. And like I said, I will just wait while they have roll out their cruise service, and I'll just be receiving a dividend while that happens. Next is Johnson & Johnson. Now, Johnson & Johnson, the last time we talked, I was only up $406.60. Now we're up $475.20 for a total return of 12.92%. Johnson & Johnson also had an earnings call, and the thing that I would note on their earnings call is there were a lot of analysts. Well, the company started it first. The company said that they saw that a lot of analysts were, with their projections of what future earnings per share, for future expectations of what they think that Johnson & Johnson is going to do with their earnings per share this year. They noted that a few analysts had them marked down for buying back stock this year, and that does not seem that's something that they didn't give any guidance on, and they don't think that will be happening. So they said that it was about 5 million share discrepancy, and they don't think that they'll be buying back shares this year, from what I gathered. But if that is the case, once that was happening on the earnings call, the stock, once they saw the earnings beat, the stock almost hit 150, and then once they said that, the stock started to tank, and now it's been sitting around here in this dormant area. So I don't expect anything major from Johnson & Johnson through this through their next earnings. So to me, this could be a great time for me to pick up a couple more shares of Johnson & Johnson. I know I'm not a fan of boosting up my average cost and the companies that I buy or anything else like that, but that's the type of thing that I like to see when a company is stagnant, but their growth is still great. They're still doing, the business is still doing what they need to do, but investors are looking at the stock like the stock doesn't have any value, or they're not, everybody's not, it's not their hot stock, and it's not the stock that people want to buy into. So I do see me maybe picking up a couple shares of Johnson & Johnson while that happens. So that was Johnson & Johnson. Berkshire Hathaway. I know I talked about a little bit of it earlier this video. So we have Berkshire Hathaway with a new average cost of $223.31, and I have an average return of $7.10 for a total return of 1.59%. I try to buy a share of Berkshire Hathaway at the beginning of each month, and I definitely believe that we will be doing that again later in February. When I do my taxes, if I'm able to get any type of tax return, I will probably be pumping that money into Berkshire Hathaway. That has been the plan. There was an article that I read, as well as they reported on CNBC. Apparently, Berkshire Hathaway, not a lot of people are talking about this, as it's just a rumor, but apparently Berkshire Hathaway is in talks with Boeing to maybe help them out, while they have this issue that they have going on. So Berkshire Hathaway might buy up some shares of Boeing, and I know that that could be big for both companies. That's what that $128 billion that the company currently is sitting on is for. Then I'm all for it, and I'm definitely looking up to raise my stake in Berkshire Hathaway dramatically. I know that the stock market would probably reward Berkshire Hathaway for pulling some type of deal off in that area. So again, that's just a rumor. You guys have got to do your own due diligence and figure that out. But to me, if that acquisition happens, that's something that I definitely want to be in. Next, we have Apple Hospitality. Last time we talked in Apple Hospitality, I was only up. I was down $231.37 for a total negative loss of 5.95%. This week we're down $402.37 for a total loss of 10.35%. Apple is just here to present me a dividend. I'm no longer sitting on their conference calls or anything else like that. It's just a pure dividend play, and this money will eventually go into one of the bigger companies that I'm holding. So that there's nothing much to say about Apple. We have Aurora Cannabis. This was another company that I had brought into. I forgot to tell you guys this was another company I brought a few shares of since the last time we talked. Last time we talked, I only had 700 shares. I brought an additional 100 shares. Our average cost last time we talked was $5.38. We knocked it down to $4.93. I was trying to tell you guys I was trying to average down to about $5. And we are sitting flat with the last time we talked, as last time we talked we were down $2,262.61 for a total negative return of 60.5%, and we're down $2,365.76 for a total negative loss of 60.2%. This company is a disappointment at best. That's what I can tell you. They have made several promises and have not been able to keep up with their promises. So I'm just in it for, waiting for them to present a deal. Once they present, the partnerships that they, have been talking about, I do believe the stock will get some appreciation. And when that appreciation happens, I do believe that I will be selling out of this company, as I'm not going to sell it for a loss. I rather, if the company, this company has gotten multiple downgrades from analysts, giving it a price range of $1 to $0. And, they cite that the company is looking, is cash strapped and, needs money to keep it going next year or whatever the case may be. So if that's the case, then I guess I'd let this money, I let the company go bankrupt, as I don't think the company is producing the lowest cost per gram out of all the big companies. I definitely think that there would be an acquisition before this company would go bankrupt. It's absurd for me to think that this company would go bankrupt. So I'm just going to hold on to the company, and hopefully before we get into any situation like that, I do see some great appreciation. So that's basically Aurora Cannabis and Diamond Eagle Acquisitions. We talked about that. But that was basically it for this portfolio. Before I let you guys go, I know that this is a pretty long video. I want to show off the subscriber portfolio that I created a couple months back. The last time you saw this portfolio, we only had about 2 shares of Uber. We had 4 shares of Uber actually, and I was down significantly. Like my average cost was about $40 in Uber, and I just was slowly buying up shares of Uber, and now the market is considering Uber, to be a really good play. So we have some appreciation in Uber. We're up $55.17 for a total return of 13.5%, and we still have that 1 share of Starbucks. But other than that, I appreciate you guys taking your time out of your day to check out my portfolio. In the comment section, if you guys could let me know how you would like these formats of my updated portfolio reviews to go. Would you like it a weekly or a monthly thing? Just let me know in the comment section, and I'll get at you the next time we talk. Thanks.